Hello, investors and traders, and welcome to the weekly market report. I'm Magee, Monte, and this is a one-year daily candle chart of the Russell 2000 ETF, ticker symbol IWM. If you've been following along, you know that I leave my lines on the chart from the previous report, so you can see how well the forecast worked out. And if you're not convinced already of how important charts are with regard to being a forecasting tool, then I think you have to look at more charts and follow along more closely because they're absolutely amazing. Now, with that said, they're not 100% correct all the time, nor am I 100% correct in reading them all of the time. But if you ask any of our members, the percentages are extremely high with regard to hitting price targets. In fact, on Wednesday, we had an Oracle hour call where we had over 20 stocks that became star favorites, and I put price targets on all of them, and all but two have already hit those targets, and the rest are heading towards those targets. Now, out of 20 stocks, it's highly unlikely I'll get 100%, but holy mackerel, that's pretty high percentages right there. I don't think I've ever gotten 100% on all of the Oracle hour calls, but the market report that I do on Friday is mainly for the general markets. If you have an interest in having me analyze your individual stocks, just call Market Rebellion and they can plug you into my Wednesday webinar. That gives you still a couple of more days to trade at the end of the week and look at the charts with us as we go along as a group. So again, getting back to my forecast here, you can see that IWM hit that target precisely. Right there at 179.07. Remember, that line was drawn last Friday. We had Monday, Tuesday, Wednesday, Thursday, and boom, right on the money. Now, why did I stop the line right there at 179.07? Because I had pointed out the fact that there was an open gap below the market. See that? Now that that gap is filled, I'm going to remove that line. I'll even remove this line right here as well. We don't need that target anymore. But look down below. We have an increase in volume on the way down. And a lot of times when you see gaps, understand that when the market gaps down like it did back here, you see that? It generally continues for a couple of days or possibly 3 days in that general momentum. And so we could see a couple more days of selling as we start to experience some margin selling pressure coming into the market. That's when brokers make those margin calls out to their clients, and a lot of those clients have to come up with the money or sell the position, and a lot of times they choose to sell the position. So I do believe we're going to go a little bit lower in IWM right there at 174.59. That'll be my target. We do have a support level down here. Don't know if we're going to get all the way back down there, but if we do, the CCI will then be oversold. So keep an eye on that CCI, because once it becomes oversold and then starts to move up and cross, we tend to get buy signals down there. Now, I'm not putting my bull cap on right now, but if you do get down to that support level, I would not be surprised to see a short-term bounce. So for those that are looking for short-term buys, whether you're an option trader or an equity trader, just remember that if you do get a bounce down there, you're going to have to use good risk management skills to put your stops below that support, because if it fails to hold that support, then watch out below. It could go a lot lower. So that's IWM. We look at the Qs, QQQ. There was another big call. I didn't think we'd get it by today, but we hit it yesterday. There it is again. That line that I drew last Friday was right at 300.12, $300.12. Again, it was a gap that was left open. It is now filled, and now we gap down. So the same scenario is what we just saw in IWM, except this tech sector is building some of that momentum on the downside. Look at this increase in volume on the way down. You see that? So my forecast is going to be very similar to IWM, but this time I think we're going to see a test of this support level. I'm going to go all the way down here and say we could reach that. I think we'll even bounce off of that, but we'll have to see. There's going to be a lot of talk about inflation, possible recession. I know Janet Yellen doesn't believe she's seeing any signs of recession, and I scratch my head and I go, really? you're the Fed chair and Treasury Secretary now, and you don't see signs of recession coming our way when every American is seeing it at the pumps and they're holding back on their spending habits. So, yeah, it doesn't make sense. I feel that we're not being told the truth in many different levels, and I think investors are wising up to that fact. I think they're seeing it with their own eyes, they're feeling it with their own pocketbooks, and those who are trading are looking at these charts and they're seeing the negative signs come in. So next week, I think we're going to go down to 281.65. This weekend, I'll be putting out the expiration week alert for our option traders. I'll be working on that almost all day Saturday, and I'll get that out before Sunday for sure to give everyone the instructions on how to roll these put spreads that we have on. But these are doing extremely well for our option traders. Again, if you want to learn how to trade options, just call Market Rebellion. It's really easy, no pressure. They'll plug you in. They'll give you some free webinars to look at and some cocktail hours that we do on Friday, and it's really a lot of fun. So again, just look in the description box below and you'll see the contact info for Market Rebellion right there. All right, so enough of that. That was a plug for Market Rebellion. I love them, as you can tell, and I think every one of our members are having a great time with us as well. So that downside target again is 281.65 for the Qs. Let's hop right over to DIA. And what do we have? Bam, yesterday hitting that target, filled this gap, went lower, created another gap, and we're already oversold. The increase in volume is going to give us the same play, except I don't think we're going to go right down to the low of that shadow from back here. But I do think we're going to go hit that as a support level. Now, if we get down to that level, like I think we will, let me just erase all these past lines here. We don't need those. We know we hit those targets. If we get down to that level of support and you start to see a drop in volume, right, the volume starts dropping, it means the sellers are losing some of that momentum. So that could give us a little bit of a break from the selling pressure that we're seeing. But again, I still would not be jumping into any long positions, even if they're short term, until I see a substantial bullish signal, a candle, or at least some type of a pivot point. Do not try to catch that falling knife, as we heard so many other times. You try to catch a falling knife, you're going to cut your hand, right? Don't try to catch a falling market with a long position. It could hurt. So that is our DIA. Again, to repeat, that target is 311.38. All right, let's take a look at SPY, and I'll wrap it up with the VIX. SPY, same thing. This was a long-term two-part forecast. You see, I left this in line. Last week I said I was leaving that target in place. I did not budge. I even said that. I'm not going to budge on that target. And yesterday we hit that target. Today, same story all over again. So I'm going to erase all this right now for you. And I think the SPY could go a little bit lower, just like the rest of the markets. Have to keep an eye on that volume. And then we'll see whether or not we get a bounce down there. Now, the VIX is a leading indicator for me. For the most part, it's inversely related to the S&P. And I hit my target today on that one. It didn't hit like the rest of the markets did yesterday. But we hit that upside target on the VIX at 27.32. 27.32. Now that that's hit, let me erase this and then back up. I want to show you that this candle has a long shadow on top of that right there. That's known as a shooting star. We could see a little bit of a dip on that, believe it or not, before going higher. And then again, we could go a little bit higher and then pull back. I'm not quite sure which way that's going to go because, as I mentioned before, we're coming out of a cycle trough right here. That's why I put this forecast down at that particular point in time, because remember a couple of weeks ago I was talking about that cycle trough and the date that we were hitting that. And so I'm going to go out on a limb on this one. I'm not quite sure we're going to hit this, but I'm going to give it my best shot right there. I think we're going to go up to test this resistance right here. We might even breach that just a little bit, but I'm going to keep that in place. Remember, my longer term target for the VIX, another one I'm not budging on, is 41.88. Let me tell you why. I'm seeing a lot of signs that tell me that something is brewing, and I get my news differently than others do. While others allow the news to hit them, I go hunt for the news. Now, one of our members pointed this out. This happened earlier this week where tens of thousands of chickens were killed in Wright County egg farm fire. And this is not the first time we've heard about this. It almost feels like our food supply is under attack. And while that might sound like a conspiracy theory for some of you, I'm seeing lots of evidence that's bringing that to light. Now, you have to also understand that another thing that I'm seeing is a strike that's about to hit us in Long Beach. Now, you have to understand the Chinese ports are opening up. They're getting ready to ship because the lockdowns are over. There's more product coming over in containers. But now all of a sudden, talks of strike in Long Beach, California, and even in Germany are popping up. Or in Hamburg, the bay out there is getting bogged down with shipping containers that are not moving because of a strike. So this seems a little odd that we have these strikes all of a sudden at the dock workers and the shipping ports. And so why am I telling you this? Because if you look at the charts again, and you take a step back again, and you look at what's going on with the trends, just again, look at this Q. Remember, I called the end of the bull market in January of this year. This is a downward sloping channel. It's not just a regular downtrend. It's a channel. It's a well-formed downward pressure all the way down. We hit resistance at this trend line. We bounce off the channel line, and we got this step down going. Now, last month, or it was actually about 6 weeks ago, I got on a Market Rebellion call, and I made a broad forecast. I know I go out and stick my neck out there every now and then, but I'm calling for the 2020 lows, March 2020 lows, as the target that I see happening right across the board. I see all the major markets coming down to these lows down here. And if you doubt that, then I would have to say, if you're going to go opposite of my positions and go bullish, you had better learn how to manage risk. I keep pounding the table on that. Now, those who are taking short positions and buying puts and doing bearish strategies also have to manage risk, because if this market bounces and comes through any of those positions and starts hurting people, you have to learn how to manage risk that way as well. But focus on the charts. I recommended a book by Edwards and Magee, Technical Analysis of Stock Trends. Go out and buy a book like that. Go out and buy some of Martin Pring's books. Learn how investment psychology works. Go listen to Bill Johnson, and how he teaches options. Go listen to any of the technicians out there who are very well known. That trends will continue to stay in place until the trend is broken. And when this trend is in place, it's not going to go into a bull market anytime soon. It's not even out of a bear market trend. It's going to have to get way out here, bounce, and then even see a zigzag ABCD pattern before we break that. And I don't see anything like that happening right now, at least from the charting perspective here. The signals are still pointing lower. So I know this went a little bit long, but hopefully you're getting the value from it. Thank you so much for all the comments. Please make sure you click the like button, subscribe, click the notification bell. You know what to do there. But more importantly, thank you so much for all the questions and comments, because I'm doing my best to keep up with those. And we're hitting record numbers of questions coming in, and people saying how excellent this is and amazing and all that. And I know, I appreciate that. But those words that you use get picked up by the algorithms. And that's why our show here is becoming so popular, is because when you make comments like that, then the artificial intelligence picks up on that and it throws it onto the main menu. So a lot of people are discovering this report and they're discovering Market Rebellion because of your comments directly. And again, I cannot thank you enough for that. So you have a great weekend, and we'll talk to you soon. So long.